All right, all you devils out there, happy Friday. Sam here with you. Oh, it's about 1:28 here on the 22nd. So a couple of things here. I'm going to do a very brief, just a quick review on the Elliott count here on Bitcoin. But first, I just wanted to let members know I've been very quiet this week. I ended up getting really sick. Finally ended up, I was so bad. I finally went to the doctor. They gave me a full-blown COVID test, and they think it's probably COVID, despite the fact I got 4 vaccines. Or 2 vaccines, 2 boosters. Apparently, this new variant doesn't care about that. So I've just been, just not myself all week. So thus I've been quiet, but starting to feel a little bit better. Got the pills, the antibiotics they gave me seem to be working a little bit. So hopefully be back to full speed next week. So just for an update here for members' benefit is why I've been a bit quiet here. So I'm just going to do this review because Sensei Tudum did a really, really nice video yesterday on Bitcoin and the S&P and some interesting correlations there. I would encourage you guys to watch that for a more detailed Elliott analysis here. Now, here's this. If you just go to Sensei Tudum, there's 2 ways to get to it. Of course, if you're in our Discord, it's in the public channel, so any free member or paid member can get access to it. But if we're not going to hide it from you if you're not a member here. You can just go over to his YouTube page, Sensei Tudum, and you'll get a nice breakdown. And he did such a good job with this. I figured it seemed a bit redundant to go over that in great detail. And we don't have enough here to really call the pivot in, right? Maybe it is, right? This is I guess this would be the primary count. Now note I am in semi-log here with Motive Wave. This seems to be the preferred count at the moment amongst many skilled Ellioticians here. I'm reluctantly calling this my primary. We can't eliminate the idea that we did a 3 and we're doing a WXY, that we could be in here, we could be starting up for the 5. Can't eliminate it, right? We didn't invalidate here by breaking the wave 1. So while it's close, this count is still alive, still active. That we did it via WXY. Of course, we could look at it this way, and the 3 could be in. We're doing a WXY here. Here's the 4. We're still going up. So these counts. Of course, the reason people have a struggle with this count is because if you take it out of log scale, right, it looks very different, right? But if had someone comment the other week that Elliott Wave International, I guess that's Prechter's deal, suggests not using log. That is incorrect, right? They have many resources for viewing charts with this kind of range in log scale, right? So the bottom line is you really have to look at both. That's kind of a pain in the ass. I get that, right? So in that, which one are we going to use? Well, there's certain charts where the range is so far, you're really forced to do it. But once you get into log scale, you want to stay there for your larger analysis. Now, if you go down to a 30-minute or a 60-minute even, and you're not looking at a range here from 3,000 to 70,000, well, then you can take it out of log. Right, I understand. It's just, it's annoying, right? But it's just the reality. Right? We got to deal with it, and we got to check in both. So, again, my point being that these counts are, here it is if we're trying to really get down, nail every swing here. Okay, maybe 1, 2, 3, 4. This would imply that while this is encouraging price action here, it at least at this point does not look like an impulse. Now, it could turn into we could have some sort of funky 2 here. We're going to need a big rip here. Then we're going to be back here saying, oh, it looks like we finished here. If we really launch here. Now, of course, this would, if we get into the range here of the second, we'll start to get some invalidation points, but we're not there yet. So those are my, here's I guess the preferred that we put in a 1, 2, right? Now this the downside. Let me rephrase that. The upside of this count here, if it's a 1, 2, well, the next leg is going to be a monster. When we looked at that last week, right? So okay, right? You really get the bull porn going when you start to do projections from this as the 2. But, right, here, even if we go up for a 1,618, the length of the 1 from the proposed 4, we're still, what are we at, 200K here, right? So this is not, it's just less bullish than if it's a 2, right? We'd be well beyond 200,000 if that's a 2, and we're going into a 3. Now, those are very big ifs, but certainly right now you could make a pretty strong case that what we don't have yet is an impulsive rip out of a pivot here. So we shall see. Now, I'm going to pull that off for a second. Again, I would refer you over to Sensei Tudum for a more detailed analysis, but I do have a member who has this count that he favors, and he wanted me to just show this to you, and I think it's quite valid here. He gave it to me. This is a 3-day. This is how he gave it to me. This is a member. It's hard to say. I think it's Al-Nawahi, right? He's been with us for quite a time. He's a skilled Elliottician, and this is his preferred count. And I think it's very valid. If this is our here on this version of Binance here, we can only go back to the COVID low. But here's the impulse, right? So it would be 1, 2, 3, and we're just correcting through an ABC, right? So you could do it a number of different ways here, but it almost doesn't matter here. If we're going to go A, B, now we're finishing with a 5 here. Again, you'd have to do he gave it to me out of log scale, right? So, and this is why people think, oh, okay, right, it's got to be a 2. Well, I think, again, you got to be careful. If this is 1, 2, 3, and we're going to put in 4 here, and we're going down for a 5 here, we're down to 11, 12,000. Is that possible? Of course it's possible, right? It's very, very much possible. Now, if we put it in log scale, where I think you've got to view this, if we're talking about this putting in a 4 here and then coming down for a 5, you can see how that plays nicely with the geometry. Now we'd have a clean 50. You'd be wondering here, though, oh, if this is swing low, swing high with an expanded B, I'm coming to the 50. What did I just finish here, right? Is this the 2 or the 3? Well, per his count here, I think he'd be this would be your invalidation. I think he'd be leaning into this as a 4, right? If this is the 3, 4. Okay, I mean it's one to keep in the mix. I would say one to put in the mix, right? I mean it has its. I mean it's valid. So I mentioned that I would share that with you guys, right? So that's his primary, so I wanted to get that one shown to you. Okay, so here's Sensei Tudum. Okay, so what I'm going to do today here, I'm going to do this since we've got a lot of Elliot, and the Elliot is continues to be somewhat unclear. I was just going to show this through you to you through market structure, and of course I'm going to use Sonar Labs, which is the company we've continued to embrace our relationship with them and are moving forward, and now have really positioned this as something that will be a key feature, not only in what I'm doing here on what I'm updating on Fridays or live streams, but this content you'll start to see more and more. And we're going to redo some of the belt system here, particularly the white belt here, to introduce this. Now, some of you members will have seen the training on this. It's deceptively simple. But because of that, it's dangerous to think, oh, I got this. Oh, swing low, swing high. Yeah, oh, higher high, higher low. It's a little bit more nuanced than that. And I would encourage you, if you've not yet done it, and this could be, we've got new members, free as well as paid, that are landing all the time. If you haven't seen it, I would encourage you to get, where is it? I'm sure you get over here to our channel and go to our playlist, and the second one down here where there's only 2 videos here, if I touch it, it hides the content. But you see this one over here where I've got 2 videos here. So if you click on this, now they're kind of long here, but it might be good weekend review here if you've not watched them here. Part 1 and Part 2 specifically demonstrating both the theory as well as the application. So if you haven't seen it yet, I would encourage you to watch those too. Okay, so now with that said, because as I go through this, it might be a little bit confusing, and that training, I think it would be quite helpful. I mean, just this last week, I had people asking me, what is this market structure stuff, right? Members that have been with us for some time. So that's just me reminding you that if, it's an alternate way, and it dovetails in really nicely with Elliott Wave. So it's not like you have to abandon one to go to the next. But I ask any of you, okay, what's the count here? I mean, can we get a count on it? Yeah, we can guesstimate here. Oh shit! If forced to, I'd probably. I'll probably do it. Oh fuck, this way, and then we working on a 3, 4, 5, right? So if this is one A, B, C into a 2 here, well, we're going to need a big impulse here for the 3. So, maybe then you'd come out of it this way, looking for 3, 4, 5. Now we got to take those down a degree, and here we'll put them in green here. So maybe that's a big maybe. Okay, so this is really going to have to rip. So for that to come out of here, okay, maybe. All right, we got the 272. Looks like we're starting the 3. So it's could it be an impulse? Could this be the 3? We're working on the 4. Yeah, could be. Of course, already, you're working on, the fact that well, here, look, we've already overlapped, right? So now we're going to do it through a diag, right? It just doesn't have the right look yet to where I'm enthusiastically looking at this saying, oh man, game on, right? But get the bull horns out, start buying with both fists, and it's game on. It's not there yet, right? So while I think Sensei Tunim is giving you some of those alternates, right? The potential's there, right? I mean, certainly off of this low. Well, a couple of things to note. Here's the swing low. We get a new high here. We get a higher low, higher high, higher low, right? I mean, very clearly, and then higher high, higher low, higher high. We've got a little trend going here. But if I pull this back out to the 4 hour, we can be very definitive about what the trend actually is, right? Now, this is the advantage of market structure, is that it's binary. There is no dispute among two technicians as to where the trend is. That's the big advantage, and I think that's part of why we wanted to start incorporating this into our technical analysis, because there's so much subjectivity in Elliott Wave, right? And that's what people consistently will complain about. Well, fuck yeah, but what if I do a WXY here? There are times when the Elliott is so clear that, I mean, it's an unfair advantage, right, to understand it. There are other times where you're guesstimating. Well, could be. I had another member, same member, that got me to spend some time on trend clarification, was sending me 15-minute counts of, I can't remember, Ripple or something, and he had probably changed it 15 times. Well, if you're down on a 15-minute, that's not surprising. I mean, you're going to continue to change it that much because it's a constant reaction to what the next swing is, right? That's why I would tell any of you that Elliott Wave is most effective when you're out on the longer term, 4 hours and above, right? Well, number one, you're not going to change your count every 20 minutes. But if you get out there, that's where you really start to see the wave relationships, and it's, I think, much more valuable when you get down here on these smaller degrees. Now here I'm on a 4 hour. So we can still do some Elliott Wave analysis on this, but right now, given what you're looking at here, let me pull back a little bit more here. All right, let's get the whole swing here. Right, from this last swing high, what are we at here? At 48. Is there any question about what the trend is? I'm going to assume not. Now I have the God MA on this, right? So this is, it's a proxy for the Vegas wave, but it's the average between the EMA and the SMA. It's just a good reference point. Well, you'll note, look at how it nails the market all the way down, right? Here's the break, here's the retest, 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 up. Does that mean trend change? Well, potentially, right? I mean, potentially, it could mean a trend change. I mean, here, when we got above it, well, really, all we do here is we go sideways, right? You can see the 200 going sideways. There's really not a rip-roaring, this is corrective, right? We've been through this a number of times, right? So what are we doing here? Oh, come here. Imbalance, correction, imbalance, right? You can see all of the big pushes where we have this imbalance, consolidation, imbalance. Now, are we just consolidating here? Is this accumulation? What do we have? Is there a clear Elliott count? No, there's not a clear Elliott count. There's just not. I mean, yeah, we can label it, but it's a guess. How about coming down? Is that clear? Is this clear? Is it 1, 2, 3, 4, 5? Could be. Could be 1, 2, 3, 4. Could be done. But this is not the start you'd hope for. So until we get some clarity and something like this comes out of here aggressively and we get a big rip-roaring impulse, this just looks to me like it's still corrective. But I'm certainly open to the possibility that it starts to rip, right? Okay. I mean, I wouldn't be sad about it. I'm pretty long a lot of Bitcoin. But we can just look at it and say, okay, well, what's the next hurdle, right? We got to get through all this consolidation, and we got to get through all this consolidation, right? This was the imbalance, right? So we come back to it. If you come back to that, look at how fast we came out of this. Right now, if we come back to it, it's not unreasonable to think maybe some unfilled orders, maybe someone who wants to get on board here. We're just correcting. We come back to consolidation. We head back lower. Is this a capitulation low? It's kind of freaky, when we broke 20, right? But is this the the aggressive, holy shit, it's on sale, let's get out of here? Well, let's use this here kind of as our range here. Okay, little turtle head. Are we breakout traders? No. Do you want to buy that? Absolutely not. Well, let me rephrase that. Would I buy that? Absolutely not. If anything, that looks much more like a sell. So why do I say that? Well, let's clean this up a little bit. Okay, again, all subjectivity is removed in market structure. This is the appeal. Okay, so where is the trend? Well, here's the last swing high, the strong high. Here's the last swing low. Well, now let's zoom in there a little bit. You say, well, wait a minute. Why is it this one, not this one? That's the lowest low. Because again, I refer you to, you're going to have to watch these two videos here to understand that as to why this is a swing low, but it's not the current swing low, because this low only gave us this little baby change of character. This gave us a more meaningful break of structure here. We do not get a new low. So this becomes the strong low. This is the swing low. This is the strong high. So right now, as we're looking at this, here's the high, here's the low, right? That's all we care about is this here on the 4 hour. This is the range we're working in. Until this is broken and we get a close above, trend is down. No dispute, no subjectivity, trend is down. I don't care about breaking the 200. Now, that might be the start of a trend change, but until we break that high, the trend is down. Period. Now, on the 4 hour, the trend is down, but if we were down to the 15-minute, what do you think the trend's going to be? Right? Higher high, higher low, higher high, higher low, right? So you've got to make that distinction between the larger time frames and what you would use to set up any kind of a sell that you might be going for here on the idea that we are still in a downtrend until we break, 32.4, right? Until we break that, it's game down. Okay, so let's evaluate that here. So let me do it this way. So if I go, come here. So if I go from this swing high to our current swing low, take that. Oh, let's go to here. Discount premium. All right. So all I'm doing is just highlighting where we get into a discount. Right. Here's the range. Right. Here's the 50. Now, of course, Sonar Labs, right, one nice thing, it's doing this for you, right? It's showing you the 50, 618, 786. It's doing that for you. It's one of the options in the software is it's going to show you where it is. I'm doing it here just to give you a very clear, so there's no confusion. So what we'd be looking for here, right, we need an uptrend on a lower time frame to get us into the discount range. Right, so here we're beyond the 50. This is potentially discount with this as the target to get to a new low. Now, this can conflict with an Elliott count, but if we're just being absolutely by design objective about the swing structure here, there is no other way to interpret this. I don't care if it goes right here. That is still a downtrend until we get a close above. Then this whole thing would flip. Right, then this would go down here. Right, then this would be the discount, right? If we break it, right now we're looking to be a buyer down here in this discount zone. Do you follow that? Right, see, until it breaks that, the trend is down. Now, I'm not saying we might not just blow up here and break through it, but until we do, you're looking for shorts, not longs. Right? Now, well, pardon me. If you're trading out here on the larger swing structure, now there's plenty of longs if you're down on a 15-minute, but for the dominant trend, we are looking for that until this breaks, right? I mean, here would be ideal. Now, there's a couple of things on the chart. I just want to make that distinction. So as it sits right now, here's the discount zone, right? Above the 50. We got, now, well, let's take a look at what else is in there. So what are these yellow lines? Well, these are called fair value gaps. So let's just be clear about what these are. Again, they're in the playlist here. I'll go through that. But what is a fair value gap? It's an imbalance, right? And we want to note these because the market will often return and respond here. So let's just look in there. A fair value gap is the distance between the close. Let's do it this way. The close of the low of this bar and the high of this bar, excuse me, the open of this bar. So I get the gap from this low and this close to this open, right? Or pardon me, to this high. Here's Jesus Christ, I'm trying to talk and draw it at the same time, right? So there's the fair value gap from this low to this high. There's a gap in there. So if the market comes back to it, often you'll see a reaction there because this was an imbalance. Now, here you got a couple close together, right? So you don't know which one they're going to react to. You get the same thing here, right? From this high to this low, right? It's skinny, but there it is, right? So we want to extend those out because that little imbalance can be a magnet to the market where you can see some reaction because there's likely going to be some liquidity there, right? We went through it so fast. So if you come back, there's reasonable chance to expect there's unfilled orders there. That's what we're looking for. Okay, so if we come back here and we look at this, knowing that right now the trend is down, and what we're looking for is an opportunity to be a seller up here in the discount zone. Let's try and zoom this back here so you can see it a little bit better. All right, so anything up here would be appealing. Now, again, as I just said, we're going to have to experience an uptrend to get there. Right? I mean, if we're going to go from this low, right, we get higher high, higher low, higher high. We're in the process on a smaller time frame of cranking our way up into the discount zone. Right, but there has to be an uptrend to get us there. Right, follow. All right, so if we're looking for that opportunity up here, what we'd be looking for is something to well, let's do it this way. So maybe we come back down, we hit an order block down here. I prefer the term demand zone here. Right? So there's liquidity here, and we push up a little higher. We get into this range here between the 50 and the golden zone. We've got two fair value gaps up here. This would be an area to be looking for on a smaller time frame. Let's say we come down here and we get up here and we finish this. So it's some sort of diag, or I think we've already. So maybe we're going to do an A, B, C of some sort here. I'm again trying to give it an Elliott count. Almost doesn't matter here to us. What we're looking for is, let's do it this way, something along these lines here to get us up into this range here. So we're just going to channel our way. Maybe we come down here, we get a little break, right? So just the trend line rule of break is going to imply that it's going to go chase a new high. So we've got that potential here that we get up into this zone. So if we were to get up, if we were to get up here, what we're looking for is, we're not trying to pick the turn here. We're going to wait on a lower time frame to get something to come back, retrace, and then if I come back here, now what do I have here? I have a change of character because this has been higher highs, higher lows all the way up. All of a sudden, I get a low, I get a lower high, then I get a lower low. So I now have the opportunity for there to be a potential supply zone here. So if it comes back into this, I'm interested. I'm interested in this short. Where's the target? Down here, right? So you're looking for one of those big, come here. One of these where I can be definitive about it, and I've got that kind of a target, right? So there's a 6-to-1, right? You don't even have to give it that much room, right? So it's just how much room do you want to give it? I'm on a 4-hour. I might go down to a 15-minute and tighten that up a little bit. Maybe I can get something closer to a 13-to-1. But I want to give it a little range here because I've got these two stacked fair value gaps, and I know either one of those is a potential candidate for the market to respond to. So that's all we're trying to do here with this technical approach. Oh, here, come out here. Is get into a discount zone and then wait for a change of character to set up the short, right? And to look for the market to respond out of, in this case, what would be a supply zone. Now, you'll note up here by the 786, if I zoom in here, I've got a supply zone up here. So what I'll do when I see them, because I'm going to change time frames, I'm going to draw that. I mean, it's really a tiny one. Right, it's the last little swing up before we go down here and set this low, then the higher low, then the higher low. So knowing that that's up here, let's pull it all the way over. And I know where my discount zone is. Let's do it this way. So let's mark these here. So if I mark them this way, when I get up here, all right, I've also got a fair value gap right there at that supply zone. So I would have to really push up here. I'd be coming up to 29.30, right, coming into 30K. And at that point, the market's going to be mighty bullish, right? You're going to have people really, really excited. God damn it, come here. You're going to have people really excited about the fact that we're pushing back towards 30. What's the play here, right? It's not to necessarily sit there with a limit order, right? Even though here's the high, we're anticipating that to hold. When we get up here, we don't just necessarily want to sell that. We want to go to a lower time frame and then wait for something like this and then a return. That's the sell. Oh, shit, I've got it. Here it is. Okay, so we'd be looking for something like this, and this is right out of that video where I did the little training on these, and these are just called flips, right? So we're getting, this is the kind of thing we'd be looking for. We get a supply zone, we get a break here, we get a minor break, we come back into it. Here's the sell. Same thing here. You get a change of character here. If you break this, now I've got a change of character. So I've been going higher, high, higher, low, higher, high, higher. All of a sudden, I get a low here. It's not a new low, but I get a lower high. Now I get first break. Now I get a change of character when I break this. Now, what did I leave behind here? I left behind a supply zone here because that's what gave me the change of character here. So this is, now it doesn't mean that the market must come back here. It may not. It may not get there, right? And you're left hanging. Just because it's there doesn't mean it must get back there, but that's where the opportunity is because you're going to find liquidity here. And that's what the market is constantly doing, searching for liquidity. Right, that's the whole idea behind. I'll come here, but behind these supply and demand zones here. Again, look how fast we came out of that. So reasonable here. Now this is a mighty tiny one, but I like the fact that it's on top. It's right next to the 786, and there's a couple of fair value gaps right there. So if we come back to that again, it's not sit there with a limit order. It's wait for the market to give you a change of character on a small time frame. So let's leave that and go to a 1. Right, here's the zone I'm looking for. Here's another. Right now I've changed time frames here, so that's why I want to mark these. Well, now I've got another one here. Right, that's a strong high on the 60 minutes. So I want to mark these. So if we're now look what's happening down here on the 60 minute. Now it changes. Right now 60 minute. Right now I've just got the major swings on this. I can add all the changes of character on the internal swing structure, but I think that can be a little overwhelming. So I'm just going to wait here. So right now, as it sits here, what's the trend? Right, here's the last break of structure. Here's a strong low, and we've got a secondary strong low. Now, if this breaks, this would defer back a pivot to this as the strong low. So as it sits right now, here's the only thing that matters right in here: this swing structure here, because this was a strong low that gave me this break of structure. Right, retrace strong low gives me another break of structure here. Right, so this is the first time I get a lower high. Now, to change the trend here, I'd have to break this, and I could come back into this demand zone here. Maybe we're going to go up here. There's my discount region. That's the sell I'm looking for. But in the meantime, higher high, higher low, higher high, higher low, higher high, higher. Right now I don't have the changes of characters turned on because they can get a little confusing. I didn't want to overwhelm you guys. But here's the change of character. Here's the break of structure. So I have an uptrend. But I just told you with absolute definitive emphasis that we are in a downtrend on the 4-hour. So what do we do with that? Well, as I said earlier, we need the uptrend to get into the discount zone so we can look for our sell there. So as it sits right now, I need this uptrend to continue to set up the sell. So where do we sit here? Is there a clear Elliott count in that? Again, have at it. I mean, could you label it? Yeah. Were you going to have any conviction in it? I'm going to guess not. So what can I say? I've got an uptrend here. I could do it, make it real simple. Just use a regression channel. Okay, I got a little break here. If I get a little break down below, I would anticipate, right, just trend line rule. If we break here, it's going to go after one more high. Where might I get long here? There's a demand zone here just waiting. Now, note, it would break this to get to that. It's going to break this low, right? But now I'm in the next demand zone here. And I'd have it in a nice 3. And I'd be looking for this to now give me a new high to break that high. Right? Trend on this time frame is up. right? So you're anticipating this to hold. If it breaks, then this becomes the strong high, and you're just staying with that. Now, could it change? Absolutely, it could change. We break here, right? Break here. Now all of a sudden we got a downtrend, and we didn't get into the discount zone that we were looking for on the 4 hour, right? It's not going to set up for you every time, and down we go, right? And maybe some of these fair value gaps, maybe some of these demand zones, we don't know. But I can say with absolute certainty, 4 hour trend is down, 1 hour trend is up. I'm looking to get a sell up here in the discount region. So is there a trade here? Well, are there trades along the way? Well, we can go from the 1 hour. Here, let's mark this. This is an interesting spot down here. Right? Here's our next demand zone. If we come down and break, let's go to the 15-minute and see what it looks like. All right, where's the trend? Look at all this breakup structure, right? So this is what I was saying, down in these lower time frames, boom, higher high, higher low, higher high, higher low, right? Breakup structure, breakup structure. This is a change of character. Here's the swing high, change of character, change of character. Here's the breakup structure, breakup structure. So as it sits right now, the trend is down. Why? Here's the range. Here's the last. We got 2 swing lows. But until this breaks, this is what we're working with. So here's the swing high. Here's the swing low. As it comes back to this, note we go, well, here you can see what's there, right? You see how this plays nicely. Let's go to, let's do it that way. All right, so we get from swing low to swing high, we actually get a little, pardon me, because it's this one. That's the swing low. So from this high to this low, because this is the dominant low, we get right into the golden zone. Now that is a different approach to it than what we're used to, which would be here, where we'd have a little break. So just an alternate here, but note, right, this is until this breaks, your trend is down. So if we come down here, we don't want to sit here with a limit order. We want to wait and look for some reaction, right? We want to see a higher low that leads to a break here to give us a higher high, and then if we come down, then we want to be a buyer looking for that. Yeah, I know that, Kim, it's deceptively simple, and when you're changing time frames, when you go from 4 hour to 1 hour to 15-minute, the trends are changing. So that's why if I go back to a 1 hour, I want to highlight where the opportunity is, where the opportunity zone is, so I don't lose it when I go from the 1 hour to the 15-minute. Oh, there it is right there. Right now on the 15-minute, it happens to be that I don't really need it as much there since I've got 2 that are right next to each other. So often you'll see the market will come down. Jesus, never get that. It'll come down, react, and then go get the second one. Right, there's a little bit of an inducement here because where the stop's going to be here, right there, right? Every pivot, right? We know, right? That's where everybody's been conditioned to put their stop. So if they can get it, you can anticipate why, right? All right, trend is down. If you sold up here, right? Note, you're selling out of a supply zone here. There's a perfect example. Here's the swing, retrace, new low, retrace, new low. Now, after that, all of that downtrend here, right? Down, lower low, lower high, lower low, lower high. All of this downtrend, here's the correction. This is the pivot that started it, right here. God damn, I'm bad with that. That's the pivot right there that started it. There's the supply zone. Look what the market does. Just a little wick to get into it. Gets into it, trend is down. What's the trade there? Oh, come here. I'd do it that way. That would be your first target. It's 5 to 1. Break there, next target. There's 7 to 1. Now, note what here, I've got the 15-minute in line with the 4 hour, but the 1 hour is not in line. Right? So ideally, you got everybody in alignment, right? But that you got to wait for that. Here, it doesn't mean you can't trade. Trend is down. Here it is, right? Here's the trend. Here's the little retrace to get back to what started this downtrend. Boom, that's your trade. Right now, you don't have to get out here, right? Remember the 4 hour, your target is way down here. So you really, actually, if you take it out to the 4 hour, you got a target down here, there's 27 to 1. Are we going to go down to 18? Well, who knows? But take that back out to a 4 hour, it doesn't look that crazy. All right, so here it is now in sync with everything we're talking about. What's the trade-off here? we did not get into the discount zone up here. Right, just because it's there doesn't mean we must get to it. It's just I mean, does that mean you don't take that trade? Well, not necessarily. That's a trader's choice, right? Or you're just going to have this. Let's say it plays itself out, right? You're still waiting for this to come back here, right? If it went down and did this, would the trend change? No, right? Trend does not change until we break this high. Oh, God, I never get it. Never get it on the first one. 2 or 3 for me every time. Got to break that 33, right? So even if we do this, right, we come down here and then we start all the way back up. We're still in a downtrend, still, right? Annoying, I know it, right? But hopefully you appreciate the binary nature of market structure. There is no subjectivity at all, period. This is the high. Until that breaks, downtrend all day. We have intra lower time frame swing structure here that you can trade up and down. I'm not saying don't trade it. I'm just saying if you want to be patient, you want to look for the biggest risk reward. Now, what's the alternate, right? The downside of this. You get something like this. Now it starts to go, and you get up here and it breaks, right? And you were up here trying to sell it. Okay, well you sold you would have set it up perfectly. Oh, I'm in the discount range. Here, let's do it. Let's do it this way. Do it a little bit more, right? You're going to come into that, right? So are you going to sell that? Yeah. Well, let's just say you get your little change of character, and then we come back to it. You selling that? Yes, I would encourage you to sell that. Right? You waited all that time for that. Where's your target? Down here. So you're going for a 15 to 1. Now, if you get stopped out, does the trend change? Does the trend, now you're up here in no man's land, right? You have nothing up here. There'd be all sorts of structure underneath it. But now we get up here, we get right here. Can you sell that? It's a tough one. No, you wouldn't want to sell it because you'd want to wait for something like this, right? To get a little change of character and then come back to it. So you're never trying to pick the turn. That's one of the other reasons that I think this is so valuable for traders. You're never, and I mean never, trying to pick the turn because you're waiting for the market to show it to you. Just like you'd be waiting for this, right? I'm waiting. That doesn't mean you're going to be right all the time, obviously. But if you're doing something like this, your risk reward is so much more favorable. I mean, look, what are you going for there? It's 19 to 1. Now, you're going to get stopped out the vast majority of the time. I promise you will. It's not like you can't come into this going, oh, fucking market structure shit doesn't work. It absolutely works. It's effective, but you've got to be able to sustain these little stop outs, right? So, but look at how many of these do you need, right, to offset all of these little losers? Not many. Not many. So you can't freak out if you get stopped out 2, 3, 4 times, right? Because these are, again, I always like to go to the boxing analogy. That's a jab, right? You get in the ring, you're going to get hit. So you are going to take out stops. But what we want to do is try and do it in a way that's, 1, definitive about trend, and 2, where we get these beautiful risk-reward scenarios, right? You got to be able to take that and not freak out. If it doesn't, okay, is that, right? Are you sad about that? We'd have a trend change, right? This would be a trend change. Then you'd have down here, likely, these would, here you'd have little order blocks down here, something like this. Oh, come here. Right? You'd have little order blocks down here. So if it starts to come back down now, all right, same idea. Are you just taking that? Maybe if you liked it, right? But really, what do you want? You want that one, the higher low that leads to the higher high. If it breaks, right, let's just assume, all right, it's just too much. We start correcting, break. Oh, all of a sudden I'm in a demand zone. Do I want to buy that? Well, not necessarily. I need a change of character. Now, if it comes back to it, yeah, now I want to buy it. That's what I'm looking for. It requires patience. You've got to wait, right? I mean, if you're trading off of the 4-hour in Bitcoin, you're waiting. You're waiting for this to all get up here. You got to get up into the discount zone, to get better odds, a better setup, all of it. Now, I'll remind you, You can do this yourself, right? You can mark these off. Here, let me finish this out and show you what else is in there. I mean, there's a lot of this. So I'm going to put it in here. I've turned off the internal. So if I do this and show the internal swing structure, you're going to get a whole lot more of information. All right, so now this can be a little confusing, which is why I take it off here, because you've got to understand the distinction between the internal changes of character and swing structure, as we saw, see this set up right here, how beautiful that was, right? That's now underway, right? How pretty that is. Break of structure, right? So here we come down. Here's the little, where are you? Right, here's a first change of character, second. Now we come back and we do it in a 3. Right, that's what you're looking for. 1, 2, 3. Hard to take, right? You're thinking, oh my God, it's going, right? There it goes. Here's a little Elliot, right? We know, right? If it does it in a 3, likely corrective. This was impulsive. This is the correction. It goes just far enough to get you in there. First target, second target. There's a great example of it. What's the 4-hour target, right? So you've got your potential there for a 27 to 1. All right, it's probably pretty long there. I know this is it's new, right? Some of you are taking to it. Some of you are like, oh shit, what happened to the Elliott wave? Well, again, I'm not trying to suggest that you abandon your Elliott wave thinking. I'm trying to suggest that you incorporate some of this for. Well, there's going to be more trade opportunity here and great risk reward, right? I mean, this one alone. Oh, shit. I mean, what are you risking there? From 23 to 23, it's maybe 200, 300 bucks, right? And that's if you had a full Bitcoin, right? So, I mean, you could trade this with leverage. Do the math, right? What's the holdup? The other thing that was interesting here, if we look at where that fair value gap came in, this is the last little pivot. Right, this won't surprise anyone. If I bring this back here from this last little pivot, all right, what do we do right here? All right, so here's the last swing up that created this move down. Here's the retrace. What do we do? So note the fair value gap is right at the golden zone. So if I teed that up for you, now of course you'd want to be paying attention to what's all the way, right? Let's go all the way to the swing high, all the way to the swing low. That's how this algorithm is going to view it. Are we there yet? All right, we come up here into that fair value gap. Now, right, remember this. Now we're into there's a fair value gap right there. There's an order block. Well, let's see, that's probably on a lower time frame. There's an order block up here. If I take that to a 4-hour, to a 1 hour, I think there is an order block there. That's a little higher. Right, it's this one here that drove it down. So it's just out of curiosity. That's the one that triggered it. So here's the golden zone off of this low. All right, take it all the way to the high, and we're not quite there yet. Now we're looking for this to come up here. Again, what would you do here? You want to be more conservative. Don't try and pick the turn. Wait for a change of character. Now we come back. That's the one. Okay, guys, there you go. That's hopefully gives you a bunch of new things to think about here. I know this is... Well, again, if you want the Elliott, if this doesn't interest you, go over to Sensei Tutum and watch this. Right, he's going to give you a really good analysis. If you're interested in market structure, you got to go through this. And it's a good weekend read, good viewing. You can put me on time and a quarter. You probably get through it just fine. But you got to understand this. Right? I think you'll find it will help you. Right? And again, there's no the big advantage is there's no distinction about where the trend is. Right. So when people say where's the trend, well, first question is what time frame. Daily, 4-hour, 1 hour, 15, 5. What trend? What time frame are we talking about? And then we can be absolutely definitive. Let's go to the 5-minute. Where's the trend on the 5-minute? Right here's. See, I'm going to take that off because that can be a little bit much. So I'm going to take these internals off just so I don't confuse you. All right, so it's all right. Very tradable here. Let's get this up here. Right, here's the order block on the 15-minute. Do we have one here that we got into? Let's take that off. I don't have one here, but I have one here. Here's a good example. Right, that's all wick, right? So this maintains itself, because that's an important distinction here. Because this is wick, we don't get a close above. It's not a break of structure. It's an internal swing high, but we don't get a close beyond. We don't invalidate this supply zone because we don't get a close above. So note what happens here. We get this. Now this is anybody curious about what happened here? Who's a buyer here? Who's a buyer there? All right, you know who that is, right? That's retail buying that, or more. I mean, it's a combination. You probably got retail buyers on the breakout as well as stops. Where were the stops? Right there, right? And anyone who was short who caught this, where'd they put their stop? Right on the other side of that, right? So what are they doing here? Run. Right, stops are getting run. Now stop, because that's a good example here of why you don't want to try and pick the turn, right? You're vulnerable to that. So what happens though? Look. As we come down, now we get the change. So here's the change of character as we break here. Here's the swing. This is all wick. So really what you're looking at here is this, right? This is what you're looking at, right? So there's the change of character, right? As we break this low, right? Right, there's a change of character. I mean, that's, right, oh shit, where did I put it? Over here, right? So here's exactly what I'm talking about, right? Here's the break, come back to it, boom. Right, here it is. There it is right there. Perfect example. Right, comes back to it. It left behind. Right, look how fast it came out of here. Then we have the stop run. Now you come back to it. What's your target on that? Right, and you got in, even better, you got into the discount zone of that supply zone. What's your target? Already got it. There's 14 to 1. Right, comes right back into the supply zone. Look how fast it comes out of there. That's another thing you want to look for. And here on a 5-minute, you want it coming out of there fast, because the assumption was that this moved too quickly. This likely running stops. We come back to it. You want it to come out of here fast. Missed it on the first one. You even got a second chance. So here's imbalance. So what happens here? Right? You can just, it's the same thing over and over again in the markets, right? So here's imbalance, consolidation, and we go back to imbalance. Oh, you had a little consolidation here. Now we're coming back. Where's the trend? Any question about where the trend is? Oh, here, let me do this. Right, so on the 5-minute, where's the discount zone? Oh, come here. Right, so here's the high. We're going to use that high. Here's the discount zone, right? Sonar Labs, right? This is so nice, right? They're going to mark it out for you. So here, I'm just showing it to you, but you can see it. So where are you trying to get that trade on? Trying to get it up in here. So if we come up into this, now you're in the discount zone. There's a fair value gap. Now there's a good example of a distinction between what many people might look at this and think, oh, I've got potential resistance. So here's a distinction. So you see this is the common prior support becomes resistance. Okay, that's different, very different than a supply or demand zone. Support and resistance distinctly different, right? Often confused. That's support becoming resistance. That's not a supply zone. Here, here we got one. Here you got this, you came back, just barely got into it before you came down, broke this, change of character. Now here's the new low. Now we're coming back, trend is down, but we want to be buying, or pardon me, in this case, we want to be, Jesus, I never get that. We want to get selling here in the discount above the 50%. So if we can get up here, that's where the next sell would be. We left this big, you can see it, right? We left this nice big supply zone. Right, look how fast we moved out of that. Right, it comes back to it. Now you know, keep in mind, you may not get this right all the way down to this low, but can you get a decent trade out of that? We're on a 5-minute, right? You'd be going from 23 and change to 22.8, right? So on a 5-minute, God, it looks like a monster, but is it really? It depends on the time frame you want to trade. Okay, I've been rambling long enough. Okay, I thought I'd give you guys kind of a different approach today. Some new things to think about here. One of the things that I would encourage you to try is if you're interested in this, Sonar Labs has a very generous trial program here. So if you want access to this, whether you're a member or not, if you just go, our link tree is directly underneath the video here, and you go to Sonar Labs, here you'll get a 10% discount. right? So if you use our link, and just your discount code is TD10, lowercase TD10, you'll get 10% off on the monthly or the quarterly. Right? Pretty nice way to get exposure to it. Plus, I think it's a 14-day trial. Right? They've got a very active Discord and lots of good things happening. Myself and one other educator here are now working with them, so you can expect to see more and more of this in addition to all the Elliot. Okay, guys, that's all I got for today. Hopefully, we're back on schedule next week. A lot of us have been sick. Monte Crypto, he had COVID. My partner over on the Ninja side, he had COVID, and likely it was COVID that knocked me down here. So we're going to be back to normal here as we get into next week and head into August. Okay, guys, have a good weekend. I'll catch you next week.